Welcome back to the Wall Street Podcast. Today we're digging into a Goldman Sachs Asia report on MINISO, ticker MNSO. It's titled Asia Leaders Conference 2025 Key Takeaways, and it dropped on September 4th, 2025. We're going to extract the core insights on operations, IP strategy, the U.S. market, and store economics, straight from management.
Exactly. It's a concise look at how MINISO is, evolving strategically, not just expanding, but refining their approach.
Right. Let's start with recent market performance. Management sounds confident about Q3 guidance.
Yes, both China and overseas seem to be on track.
And in China, SSG, that same-store sales growth, actually accelerated from Q2. They're projecting high single digits.
Which is quite strong.
Yeah, and get this. The MINISO Land store in Shanghai pulled in RMB 16 million in sales just in August.
16 million from one store. That really highlights the power of those larger, experience-driven formats.
It does. It's not just about selling stuff. It's about creating a destination, a buzz.
Precisely. It feeds into their brand image.
Okay, which leads nicely into their IP cultivation strategy. They had success with Yoyo, right? Projected RMB 40 million this year.
Correct. And now they've launched Kumaru blind boxes, RMB 49 a pop.
And how are those doing?
Apparently pretty well. Good sales, positive customer feedback.
So management's plan is sort of a three-pronged approach.
That's right. Keep the core value for money products, collaborate with big names like Disney, Sanrio.
The known entities.
Exactly. And then gradually, carefully build their own exclusive IPs, like Yoyo and Kumaru. What's smart here is the long-term view. They see it as a process, using data, AI feedback.
So not just throwing things at the wall.
No. It's calculated. They're even using exhibit spaces in the bigger stores to test things out. It's about sustainable engagement, not just quick hits.
A modern way to build a brand, really.
Yeah.
Okay, let's pivot to the U.S. market. How are things looking there?
Operations are progressing well, according to the report. Management doubled down on their strategy. High-quality, concentrated stores.
So not just planting flags everywhere.
Right. More about depth than breadth. And they brought in a new U.S. CEO late last year, Q4 2024.
Ah, okay. And the focus there?
Enhancing talent, optimizing store openings. The goal seems to be making MINISO a one-stop shop for U.S. families.
Interesting. So that focus on quality stores of the new leadership, it signals a shift, maybe, towards deeper market penetration.
I think so. It's about building a solid brand foundation in a competitive market, becoming a real retail destination, not just another store count number. Quality over quantity.
Makes sense for the U.S. Now let's talk numbers. Store economics, payback periods.
Okay. For a regular MINISO store in China, about 200 square meters. Payback is around 1.5 years. Pretty healthy.
And the flagship stores.
Stronger sales per square meter. Payback is similar, maybe slightly faster. 1 to 1.5 years.
But the real standout seems to be the MINISO Land stores, right?
Yeah.
The big ones, 500,000 square meters.
Exactly. Shortest payback period, often under a year.
Wow, under a year.
Yeah. And they serve another purpose too, acting as a kind of channel brand builder and a place to test new IP products, manage inventory risk.
So these larger stores are key financially and strategically.
Definitely. And this all ties into why Goldman Sachs maintains their buy rating.
Right. What's the target price again?
US $25.30 per ADR. Or HK $49.
And the catalysts. What's driving that buy rating?
Goldman sees potential from accelerating store expansion, better SSSG, a higher contribution from these IP products we talked about, and also operating leverage from their overseas direct-to-consumer efforts. They're projecting, about a 20% adjusted net income TAGR.
20% CAGR. Solid potential. But what about the risks?
The usual suspects, really.
Yeah.
Intensified competition, SSSG recovery maybe slowing down, geopolitical issues, and potentially higher operating costs. Standard risks for a global retailer.
Okay, so bring this back to the general public, to you listening. MINISO's whole strategy, this blend of affordable stuff, popular characters, and these exclusive IP blind boxes, it directly shapes how people shop every day, doesn't it?
Absolutely. It influences family shopping, offering accessible, trendy options, for basic household goods, but also those fun, entertainment-driven impulse buys.
It's tapping into both need and novelty.
Precisely. And maybe the final thought here is how MINISO exemplifies this integration value, entertainment, targeted experiences. It's kind of a blueprint for engaging consumers today. It really makes you think about what drives choices now, that mix of practical value and just finding something new and fun. It's redefining retail engagement in this global market.